Uh, Hi guys, I hope the live is very clear to you. Hi guys, perfect. So we'll proceed. So guys, now we are going to discuss, we are going to revise another chapter called audit evidence. This audit evidence has totally these many concepts. Approximately we have 8 standards, and we also have 2 different concepts, something like concept of assertion and concept of audit trial. So what I am going to discuss, whatever I have ticked in green, that we are going to revise it now. So we are going to revise approximately 6 topics, like 4 standards we are going to revise and 2 different topics I'm going to revise. 4 standards I'm not at all touching in this revision. 500 I'm not touching, 520, 530, 610. They are equally important here. But in a revision class, I'm only covering these topics. These, whatever I'm not highlighting, whatever I strike off, that I'm not covering in the revision session. Okay, so actually I'm running very tight in terms of time, but it's okay. In the previous session also I told you tomorrow we are expecting a second baby. So, but still, in spite of that schedule, since I promised a day before exam revision, I'm taking it up. Already close to 4 hours I already gave. Yesterday I gave some 2.5 hours revision, and today morning also I gave 1 hour 15 minutes revision. Now this is another 1 hour 15 minutes it's going to be. So already 4.5 hours revision including this. Again, items of financial statements I will give guidance. In respect of items of financial statements, I will give guidance on that. How to read in items of financial statements, what to read exactly, what many students miss in that chapter, that also I'm going to cover. Now, without any delay, let's enter into the topic. 501, 505, 510, 550, concept of assertion, concept of audit trail. These are the 6 topics that we are going to discuss now. Now, first one, 501. See, many students, when they see 501, 505, they think there are nothing. There is no simple standards. They're all nothing. Nothing is there in that. But when they see the question in the examination, they will think of like, where is it coming from? So that's how the students generally, like, they will be shocked to see the kind of questions. So don't take these standards as a simplest standard. They are all very complex standards, and let's decode that. Let's revise each and every complex part of it. Now in 501, what is 501 standard is talking about? 501 talks about, the heading is this: audit evidence, specific considerations for selected items. Audit evidence, specific considerations for selected items. Now the standard has selected 3 items: inventory, litigations and claims, segment information. The standard has selected 3 elements. One is inventory. Just a minute, let me open that. So the standard has selected totally 3 elements. One, you see I have highlighted with the black color here: inventory, litigations and claims, segment information. 3 were selected. Now what we need to consider, because here the standard says specific considerations for selected items. Selected items we saw. Specific consideration what? For inventory, you need to get evidence on existence and condition, whereas for litigations you need to get evidence on completeness of litigations and claims involving the entity, whereas for segment information you need to consider presentation and disclosure. So for inventory, existence and condition, you need to get evidence. For litigations, completeness of disclosure of litigations and claims. Even for litigations and claims also, they are mainly talking about disclosure. For segment information also, they are talking about presentation and disclosure. So with respect to inventory, we should get evidence on existence and condition of the inventory. With respect to litigations and claim, completeness of inventory. With respect to segment information, presentation and disclosure. Now directly, first let me go to segment information, which is the simplest one. Segment information. So what auditor has to get evidence about? What auditor has to get? In the recent Jan exam also, segment information, I think this question, understanding of management methods, has been asked. Okay, fine. Anyhow, segment information, we know it refers to details about different products and services of a enterprise. Yes or no? Where are and its operations in different geographical areas. So what is the audit evidence? The auditor shall obtain sufficient appropriate evidence regarding presentation and disclosure of segment information. So every company will present segment information, right? How are they presented? How are they disclosed? Whether are they in accordance with financial reporting framework? That is what we need to obtain evidence. So we need to obtain evidence on segment information, whether the segment information is presented and disclosed as per applicable framework. Suppose if the company Ind AS is applicable, as per Ind AS, segment information presented clearly or not, you need to get evidence. Now, in order to get this evidence, what you need to check? See, segment information, I hope you might have understood. There are some methods on identifying segments, identifying reportable segments, some methods were there. So understand management methods for determining segment information. So management would have followed some methods, right? Management would have implemented some methods, right, to identify reportable segments. What methods they used? Whether test those methods. Like test, management would have told some asset method, profits method, revenue method, some method. Test them. You also find out how many reportable segments came and see what segments they reported, what are reportable segments, whether matching or not. Perform analytical and other procedures as necessary. Analytical process means last year how many segments were there, this year how many segments were there. If any segment was discontinued, discontinuing operations requirement and all, you should check. The auditor is not required to give separate opinion. By the way, just because we are checking segment information, are we liable to give any separate opinion on segment reporting? No need. This is one of the selected items which the standards on auditing felt important. One of the important items. They just asked us to get sufficient appropriate evidence on presentation and disclosure of segment information. Now, you need to understand methods which management used, right? When you're understanding the methods, there are some matters which are relevant when you're understanding the methods used by management. Whatever methods management used, testing methods we call them as methods for identifying reportable segment. Okay, whatever methods they're using, when you're checking those methods, keep in mind the following matters like sales, transfers, inter-segment transactions and eliminations, comparisons with budgets and expected results, allocation of assets and cost among the segments, consistency with prior period, adequacy of disclosure. This itself can be asked as a 4 marks question, or write about audit evidence for segment information. This itself can be asked as a 3 or 4 marks question. That's it. So this is one segment. This is one part in 501. Now, another important one, litigations and claims. What is the audit procedure regarding litigations and claims? First, what auditor has to do here? Auditor, what is the auditor's objective here? The auditor has to obtain sufficient appropriate evidence whether the impact of pending litigations and claims of the entity, were they completely disclosed or not? Completeness they need to. Yes or no? So, yes, next. Audit procedures for litigations, audit procedures regarding litigation and claims. Litigations and claims may materially affect financial statements and require disclosure or accounting. Okay, fine. Audit procedure. What are the procedures to identify? Enquiry of management and in-house legal counsel. This is most important. Straight away they can ask as a 4 marks question. Audit procedures for litigations and claims. First to know, enquire management. Dear management, what are all the litigations were there? What are all the pending cases were there against the company? Not only management, enquire in-house legal counsel. Some large companies and all, they will have internal legal team. So ask them. Review minutes of top management. Review correspondence with external legal counsel. Review legal expenses account. Like here you see minutes of the top management meetings to identify are there any litigations which they covered. Look at correspondence with external lawyers. So through this correspondence, the auditor might discover any other pending cases against the company. Review legal expenses account. Legal expenses means what? Ledger account will be there. For what are all purpose legal expenses were incurred to check out. Through that, you may discover some pending cases against the company and use risk assessment insights. The company would have already performed risk assessment, right? So get those insights. These audit procedures may also provide evidence regarding valuation or measurement. When you're checking, when you're checking existence of litigations, you may also get evidence regarding valuation. Getting it? That's it. Next. Sometimes direct confirmation is important. Direct communication is important with the external legal counsel. Sometimes direct communication. So when to seek direct communication? Actually this was asked for 3 marks question. And procedure for direct communication, like when to seek direct communication, what is the process for direct communication? These two put together, they might ask as a 4 marks question. Be careful. When the auditor will get this is one item. There is another context. When meeting external counsel, see one point is direct communication with them. Like we don't meet, you send a direct communication. Say 505, you just send an external confirmation. When to do that? There are some cases where you want to meet them. when to meet them. For example, in certain cases, no, the auditor may judge it necessary to meet external legal counsel. For example, matter is a significant risk. So on the matter where auditor is checking, no, he felt that significant risk is involved and the case is being handled by external lawyer, so he may decide to meet them. Complex matter exists, disagreement between management and legal counsel, some issues going on between the management of the company and the legal counsel, some issues going on between them, there is a conflict going on between them, or disagreement is there. I want to get a clear picture about what exactly the litigation is about. Then I will meet external legal counsel. In exam they will ask you, under what, they have asked once more, under what circumstances the auditor may require to meet external legal counsel. In certain circumstances, in the following circumstances, when there is a significant risk, when the matter is complex, when there is a disagreement between management and legal counsel, in all these cases the auditor may meet external. But remember, even if you want to go for these meetings, management's permission and management representative attendance is must. You can't directly privately contact external counsel without management's authority. So you must tell specifically to the management, get their permission and go and meet to the external lawyers. And make sure that one of the representative of the management is also there along with you when you're meeting external legal counsel. This is meeting. Sometimes you want to send confirmation. When you will send direct confirmation, when you will directly communicate with them, when the risk of MMS is identified. If auditor felt that some MMS is possible in litigations and claims, you felt that company is omitting some material litigations, or audit procedure suggests some other litigation might exist. When I'm checking one case documents, I felt that this will have few more implications, few more cases also possible. Okay, you felt that. So you want to get a clear-cut opinion of the lawyer. So that time also you can communicate with external legal counsel. Now, suppose you want to do communication, right? How you can do communication? Through general letter of inquiry or through specific letter of inquiry. Letter of general letter of inquiry, letter of specific inquiry. What is general letter of inquiry? Very simple. General letter of inquiry, how I will send, I will draft mail like this. Sir, we are the auditor of so and so company. So we understood that you are the lawyer of the company. Kindly let me know what are all the cases that you are dealing with the company and give a list of it. Like that, I'm generally asking him. I am not mentioning him which case he is dealing at, case names and all. I'm not talking. I simply mention I'm auditor of the company. Please give me list of cases that you're dealing. That's a general letter of inquiry. Many lawyers, they don't respond to a general inquiries like this. Now, if a lawyer is prohibited from responding general inquiries like this, then you will specifically ask them, like specific inquiry. In case general inquiry, it is unlikely that external legal counsel responds. Like external legal counsel, they don't respond for general inquiry. The auditor shall use a specific inquiry, and in that letter mention the list of litigations and claims, management's assessments of the outcomes. Sir, these are the list of litigations which management told me that you are dealing. So dear Mr. Lawyer, you are dealing 10 cases about this company. For this company, this is what management told me, 10 cases. 5 cases they said contingency in nature, 5 cases provision is what they mentioned. So request them, request the lawyer, confirm management assessment. Like 10 cases you are dealing, sir, 5 cases like this is the status, 5 cases this is the status, this is what management told me. Please confirm me whether management assessment is correct or not. So specifically mentioning list of cases and then sending them and asking them to confirm. This is specific inquiry where many lawyers will be willing to respond. So request that external legal counsel confirms management assessment and provide further information to the auditor if the list is incomplete or incorrect. So I will tell them, sir, these are the 10 cases which you are dealing. This is what company management told me, and the status of these 10 cases are as below. Like this is what management told me. Please confirm whether this 10 cases information correct or not as per your records. Also tell me if any of these cases not there, or if any other additional cases are, please give me. This is a specific inquiry. General inquiry means what? Through a letter of inquiry, ask external counsel to directly communicate with the auditor. If direct communication with auditor is prohibited for the ELC, external counsel, then perform alternative. What is the alternative procedure? If at all for a general inquiry, if legal counsel is not responding, then I will send a specific inquiry. Are you clear? So I hope now I don't know how many of you know this extent, know this depth that is there in the standard. SA 501, when they say nothing, very simple standard inventory litigations. This is the depth of the standard. I hope now you are able to understand. Okay, so in exams, no, they once specifically asked about letter of specific inquiry. In one of the exam they asked, in one of the exam they specifically asked about when meeting external legal counsel is required. In one of the exam, under what circumstances direct communication is required. This is asked for 2 marks and this is asked for 2 marks. Like this also they might ask. So be careful, don't take it granted. The subject auditing is very in-depth. You must know how depth the questions will come. This is the syllabus. This is what there in the ICA book. Many students don't even know that this much depth is there. That is why they fail in audit. Many students fail in audit not because they are not able to understand the subject. They don't even know syllabus what it is. They don't even know how much is there, how much depth is there in the standard. That's it. You know, this was asked in one of the attempt. This was asked in one of the attempt. This was asked in one of the attempt. You can go and check in our question bank we gave. So be careful. Next, finally, now coming to inventory. So with respect to inventory, what auditor has to obtain? You must obtain sufficient appropriate evidence regarding existence of inventory and condition of the inventory. For example, here one point I will tell you. You know, company inventory is there in one godown. Auditor, no, he did not visit the godown. Instead of that, he saw existence of inventory through CCTV camera. So through CCTV camera, through photographs and all, he saw inventory whether they are existing or not. Is this a correct audit procedure as per 501? This is how a question has been asked in CA final. This is not correct. Through cameras and all, you may get evidence on existence, but you don't get evidence on condition. Sometimes MCQ will be asked. You know, when auditor is attending physical inventory counting, he need to obtain evidence on what? Option A, existence and condition. Option B, valuation and condition. Option C, valuation and existence. Option D, existence, condition, and valuation. Option A, only existence and condition of inventory. You know, valuation of inventory, whether correct or not, accounting standard is already there and we verify accounting standard. So we are not bothered about valuation. We are bothered about existence of inventory. Is inventory there physically, first of all? If it is there, in what condition it is there? Condition of inventory is important for valuation of inventory. If the inventory is in damaged or obsolete condition, then it is valued always at NRV. If the inventory is in good condition, then it is valued at cost or NRV, whichever is lower. Remember this principle. So condition of inventory is most important. So if you want to know condition of inventory, how can you check condition through photograph? How can you check condition of inventory through CCTV camera? You can't. So that is not an adequate audit procedure for 501 purpose. So what 501 says, you must obtain sufficient appropriate evidence regarding existence and condition of the inventory. For that, what auditor has to do? What is the audit procedure for obtaining evidence on existence and condition of inventory? The audit procedure is very simple. Attend physical inventory counting. Simple. Auditor attendance at physical inventory count. What he will do by attending? Evaluate management's instructions and procedure for recording and controlling. Look at what management instructions are. Look at how they are recording and controlling the counting. Like how are they counting it? What instructions management gave for counting? So whether are the counting procedures correct or not? First to look at. Inspect the inventory. Observe the count procedure. How are they counting? What management? First to look at the management instructions for counting. So, okay, management instructions and all seems logical. 2. Observe how they are counting. Are they counting as per management instruction? Check out. 3. You also inspect the inventory and you also perform test count. Like employees of the company will be counting and telling numbers and all. You also go to that rack and see whether that count is matching or not and reconcile with records. Physical counting is there, right? That count matching with the records or not. Inventory records will be there. Verify whether entity final inventory records accurately reflect the physical count result. And now when you are attending at physical inventory count, you need to inspect inventory for existence and condition and perform test count. Observe compliance with management instruction. Obtain audit evidence about reliability of management procedure. These procedures may be either a part of control checking or it may be part of substantive. So when you're attending physical inventory counting, the process of you're observing all this, right? This may be part of test of controls or this may be part of test of details. Anything it may be part of. Now matters relevant for attendance when you're thinking to attend physical inventory count. Suppose you decided to attend physical inventory count. There are some points that you should keep in mind. Like what is the nature of inventory? Is it a gold? I mean, if it is a jewelry business, it's a gold. Is it cotton or is it rice product or is it any industrial iron or oil? What exactly? What is the stage of completion of work in progress? What is the risk involved? Internal control system, whether proper procedures and instructions are given for counting, timing, when they are counting, 31st March or some other data, location of inventory, materiality and risk at different locations, need for an expert. whether entity using perpetual inventory records. So what are the matters relevant for attendance at inventory counting? 5 points. There are so many points, but there any 5 points you write, that's sufficient. Sometimes no, company may not be doing inventory counting on 31st March. They might be doing inventory counting on some other date. What procedures extra you need to perform when inventory counting is at other than balance sheet date? If physical inventory counting occurs on a date other than financial statements date, then auditor has to perform additional procedures. Same, the above procedures you will perform. You will check management instructions, you will check how they are counting, you will test check inventory, you will inspect the inventory, all that you will do. In addition to that, since inventory counting is conducted at April month or May month, not on 31st March, intervening between these dates, what are all the transactions happen, whether they are properly recorded, auditor must perform additional procedures to ensure changes in inventory between count to date. For example, counting is on 15th April and balance sheet date 31st March. Are they properly recorded or not? I will check. So on 15th April, if inventory physical inventory matching with records, perfect. Now between 31st March and 15th April, what are all inventory movement is recorded, whether that is proper or not, check out. Then automatically you will get an evidence on 31st March inventory. Next, relevant matters auditor should consider to verify changes in inventory, whether perpetual records are maintained, reliability of perpetual inventory records, reasons for differences between physical count results and perpetual records. So this itself can be asked as a straight question, 4 marks question. What are the additional audit procedures if inventory counting is performed at a date other than date of financial statements? The auditor has to perform additional procedure to see that changes in inventory between the count to date 15th April and 31st March are properly recorded. And next, second one, additional procedures, especially to verify changes in inventory. They said, right, to verify changes, no, additional changes in inventory has been correctly recorded. And how do you verify, how do you know changes are correctly recorded? See whether perpetual inventory records are properly adjusted. For 15 days, whether perpetual records are adjusted correctly. Reliability of those records. How do I know perpetual records are reliable? I will see the actual transaction. Whenever an order is received, first records are updated, then goods are delivered. Like that. Reasons for difference, if at all, there between the physical count and perpetual records. Remember, in a perpetual system, physical inventory must match with records. There should not be any difference. If there is a difference, why there is a difference? Auditor has to investigate. So this itself can be asked as a 4 marks question. Sometimes, auditor may not be able to attend inventory. But before this, let me talk about when inventory is in the control of third party. Let me talk about inventory under the control of third party. Inventory under the control of third party. If inventory is under custody and control of third party, for example, inventory in transit, inventory with a job worker, inventory with another company, goods sent on sale or return basis, inventory lying with warehouse, Amazon warehouse. For example, many sellers, many manufacturers, their inventory will be lying with Amazon warehouse. Their inventory will be lying with Flipkart warehouse. Like that. Okay, so if at all inventory is with third party and is material to the financials, the auditor must obtain sufficient appropriate evidence regarding their existence and condition by following methods. 1, direct confirmation from third party about how much quantity he is having, what is the condition, or another process, directly you go and inspect or perform other procedures. You inspect or perform other procedures appropriate. Sir, what are other procedures, sir? What are other procedures, sir? Examples of other procedures. In one of the exam they asked this. MCQ they asked in one of the MTP. Which of the following is not an example of other procedure? See, when inventory is with third party, auditor may perform either one of the following or both the following. 1, get a direct confirmation regarding quantity and condition. 2, perform inspection. You go directly inspect, or other audit procedures as appropriate. Other audit procedures means what? 4, inspect documentation such as warehouse receipts regarding inventory held by third party. Like what is the proof that inventory is with third party? Request confirmation from other parties if inventory is pledged as collateral. Attend or arrange another auditor to attend third party. Obtain a report from another auditor or service audit report on adequacy. So inspect documentation such as warehouse receipts. Request confirmation from other parties. Attend or arrange another auditor to attend third party count procedure. Obtain report from another auditor or service auditor report. Suppose if the company inventory is kept in Amazon, Amazon will give an audit report, service auditor report. There is a report called 3402, SOC1 report, SOC2 report, like that some reports and all were there, which we will discuss in CA final. So when inventory is with other third party, request confirmation, directly go and do inspection or other procedures. Other procedure means what? Like check the documentation. Request confirmation from other parties if inventory pledged as collateral. Attend third party physical count procedure. Third party is doing physical counting, right? Go and attend or send somebody else or get a report from another auditor or service auditor on adequacy of third party internal controls over inventory. So get an evidence on counting, inventory controls, attend physical inventory counting done by third party, inspect documentation, or if the inventory is pledged as collateral, get a confirmation from them. These are examples of other audit procedures. In exam they will ask you specifically this question, 4 marks. Our students will go and write some answer and come and thinking that that is right answer, but see how specific the standard is drafted. That this is the kind of clarity that you require. See, since it's a revision class, I can't give more, I can't discuss more, but still I'm almost from past 20 minutes I'm discussing this. Now finally, sometimes auditor may not be able to attend the inventory. Suppose companies counting inventory on some other date, and on that date you are unable to attend. In such a case, if auditor is unable to attend physical inventory counting due to some unforeseen circumstance, then conductor observe inventory count on an alternative date and perform procedures on intervening transactions. Suppose if inventory counting is impracticable means what? You can't go there at all. Auditor, there is a threat. If attendance at physical inventory counting is impracticable, then the auditor has to obtain evidence on alternative procedures. Modify the opinion if alternative procedures are not possible. Impracticality may arise due to nature of the inventory or location of the inventory, such as safety concerns at the site. By the way, what is not impracticality? Auditor is feeling difficult to go there. Auditor feel time waste. Auditor saying, no, inventory counting is costly. This is not a reason for impracticality. General inconvenience is not a valid reason. Now, what are the alternative procedures? Look at the documentation of subsequent sale of inventory. Suppose you can't go to the location of inventory because inventory location is at some location where war is happening right now. So it is not at all advisable for the auditor to go there. So it's impracticable. But how do you know inventory is there at that location? See, April month, May month, some sales were there from that godown. Sales were there means in the godown inventory is physically there, right? So that is called subsequent sale. Perform other valid procedures if practicable to verify existence. If evidence cannot be obtained, sir, alternative procedure also not possible, sir, then modify the opinion because there is a limitation on the scope. You are unable to obtain evidence regarding inventory lying in the godown, and you are unable to perform alternative procedure also. Therefore, you will directly give the modified opinion. That's it. 501 is over. I hope you are confident on 501. You see how much is there in 501? Let me show you the similar thing in 505 also. Like there's so many students have misconception. 501 very easy, 5 minutes or 10 minutes. 505 very easy, 5 minutes or 10 minutes. No, there are all so many complex things were there. This is how in exam they test. Even in 505 I will tell you how they tested in the recent exams. Now that's it. So with this 501 is complete. I hope you are clear on 501. Just a minute. I hope you learned some new points. Just a minute, ma. Next, yeah, SCA 505 external confirmation. This is one standard where everybody thinks I know everything about the standard, but I will show you so many points which I think you might have neglected. Don't worry. External confirmation means what? Direct confirmation by auditor with the third party. Okay. Now, what many students think is external confirmation is what? A PCR will be there, positive confirmation is there, negative confirmation is there. That's it. No, that is very minimal. That's a very basic element in the standard. There are many things which are tested in the past exams, okay, which many students fail to pay attention. Now look at external. What's an external confirmation? Audit evidence which is obtained as a direct response to the auditor from a third party. From a third party, auditor is getting direct response, okay, to the auditor either in paper or electronic form, whatever it is. So then that is called as an external confirmation. Okay, like what is external confirmation? First, what is the external confirmation procedure? Where and all I use external confirmation? External confirmation procedures are generally used to confirm or to request information about some account balance and their elements. They can also be used to confirm terms of the agreement, contracts, transactions, absence of the conditions like side agreements. Are there any side agreements and all? Okay, so external confirmation can be used for confirming or getting information about account balances, their elements, transactions, terms and conditions, anything. Now, what is the procedure? First, identify the information. What is the external confirmation? First, identify the information. For what information you want confirmation? Sir, creditors, sir. I want information on creditors. I want information on debtors. I want information on inventory lying with third party, sir. Okay, identify the information. Now, select the conforming party. Appropriate conforming party. I know third party organization is there, but inside that who should reply? From whom to whom you should ask this confirmation? Accountant, finance manager, CFO of that company. Who has to? So responses are more reliable when external confirmation request is sent to a party where auditor believes is knowledgeable about the information. So according to me, he knows in that organization, in that creditor organization, debtor organization, so and so manager, accounts manager knows about the information which I want. So then identify that party, then design the request. Design the request. When you are designing the request, there are some factors. This itself was asked as a 4 marks question. Request. The external confirmation request must be properly addressed, and you must also include written information for direct response. When you are sending a mail, you should clearly tell to whom they should reply. Reply mail ID also you should clearly mention. Okay. Now, the design of confirmation request affects the response rate and reliability. How you are designing that affects response rate and reliability. See, you need to make sure third party job simple. When you are designing the request, you fill the amount, you mention everything and tell them, sir, please, whether you agree or disagree, you just reply. There are two types of designs. There are two design formats. External confirmations are broadly two types. There are two methods: positive confirmation request and negative confirmation request. In a positive confirmation request, third party has to respond whether he agree or disagree with the information. Whereas in a negative confirmation, the third party will respond only when he disagree. Now here, when you are designing the request, see, it may be positive or it may be negative. When you are designing the request, in a positive, how will I design? Sir, I am the auditor of so-and-so company, sir. In our company, your account is having a credit balance. Means he is a supplier. Our company has to pay him. So in our books of accounts, we found out that we are liable to pay you 10 lakh rupee as on 31st March. Kindly reply whether in your books of accounts, how much balance is there. I will ask him, sir, how much balance is there in your books of accounts? I will put a blank and then send him. Send. Some third parties, they will not respond if you ask them to fill the amount. If you ask them to fill the amount, they will not respond. Suppose you ask them, sir, 10 lakhs is there in our books of accounts, sir. Will you agree, yes or no? Just tick and send me. They may respond. This is a designing. See, here also, you see, positive confirmation request, it can be with a blank or it can be with a number, and where we may ask him yes or no. Both are positive only. In negative, what happens, sir, in our books of accounts, 10 lakhs is the outstanding balance, sir, as on 31st March. Please respond if the amount is not correct. Please respond if the amount is not correct. If you do not agree with this, with the information, see, we are sending request, right? Confirmation request, right? Inside that some information we put, right? If with that information in the request, if third party don't want to agree, then only he should respond. That is NCR format. Able to understand? When NCR will be used, that point we have. There is a specific question asked in past examination. Under what circumstances negative confirmation request can be used? That specifically we will discuss. So, look at, so the design of the request affect the response rate. If at all responding is made very easy, the third party has to simply reply yes or no. They will respond very fast. If at all third party has to take some pressure, they have to take some stress, they need to open their books of accounts and fill the amount. If that is the way you are asking, they may not respond. So the design of request affect response rate and reliability. So when you are designing, you should keep in mind the following points. What assertion you are addressing? Assertion means, are you talking about the existence of account balance or are you talking about valuation? Which assertion you are addressing? Accordingly you should design. And identify the risk of MMS, layout and presentation of the request, past experience on civil audit, method of communication, management's authorization for confirmation parties, ability of the confirming party to provide requested information. Some third parties, the person manager may not have the authority to respond. So that is also important when you are designing the confirmation request. See, management authorization, method of communication, paper, mail, past experience, layout and presentation. You may use a positive format or negative format. Within the positive format, you may put a blank and then ask them to fill, or you mention the amount and ask them to respond yes or no. All these points you should keep in mind. See, if you are checking overstatement, then there is a way to ask. If you are checking understatement, you are worried about risk of understatement, then there is a way to design the request. So there are so many elements you need to consider when you are designing the confirmation request. So these are the factors. Any 4 points, 4 marks question they'll ask, any 4 points you need to write. Straight question like this can be asked. So okay, you design the request, now send it. Now send the request. Okay sir, I sent sir. Send the request including follow-up request as and when needed. Generally follow-up request will be there in positive confirmation request format. In a negative confirmation format, follow-up request may not be there. Okay, next. Ensure requests are properly addressed and validated addresses before sending. In exam they might ask you, write about sending the request. Use additional or follow-up request if replies are not received within reasonable time. To enhance reliability, use positive confirmation requests that do not state the amount. You see, don't mention amount. In a positive confirmation request, tell the third party to fill the amount and send. But if you do like this, it may reduce response rate due to extra effort is involved. So generally the best way to send a confirmation request is, sir, we are the auditor. As on 31st March in our books of accounts, there is a liability for you that we need to pay some amount to you. Blank amount, put a blank. Please fill the amount that we have to pay as per your records. Third parties may not respond for these kinds of requests. This layout and presentation is not acceptable for third parties because they need to put the amount. Some third parties, what they feel, ayo, if I put a wrong amount, a company will pay lesser amount to me. Like that, they'll be having some fears. Next. So what is the procedure? Very simple. First, determine the information. Identify appropriate confirming party. Design the request. Send the request including follow-up request. Over. This is the external confirmation procedure. Standard is not yet over, my dear. There is one more definition. Exception. There is a definition called exception. Many students don't know this. Exception definition is there. So that we will discuss now. Next. Negative confirmation request. What is a negative confirmation request? In a negative confirmation request, I will send confirmation request to the third party. In that information I will mention like this: sir, in our books of accounts the account balance is like this. Please reply if you disagree. Ignore otherwise. Non-receipt of reply within 3 days. Non-receipt of reply within 3 days. We assume that you agreed with this. Like that we will mention and then send. Now 3 days over, third party did not respond. We assume that third party agreed. But tell me, did third party explicitly agreed? No. You see, negative, see, that's why sometimes what happens, you send a negative request. Third party has not at all seen the mail. Third party has not seen the mail at all. He didn't open at all. He was on a vacation. But actually, our client books of accounts and third party books of accounts, there is a lot of difference. And when you investigate, you will know that our client books only wrong. But what happened, you sent a negative request, third party did not reply. So what auditor felt, everything is matching, our client books of accounts are right. So that's why negative confirmation request is very dangerous. Negative confirmation request provide less persuasive evidence. It is less convincing than positive confirmation request. Auditor shall not use NCR. Negative confirmation request you are prohibited to use unless all the conditions below are satisfied. All the following conditions must be there. Then only in that scenario, in that class of transaction, in that account balance, negative confirmation can be used. Assessed low risk of MMS and obtain evidence of control effectiveness. In our client, no controls are effective, and on the debtors or creditors, you got an evidence that low risk is there. Population includes small items. They are all small items. Low exception rate is expected. Exception rate is low. What is exception? Exception rate is low, I agree. What is exception? Generally, exception means what, See, here you see, exception means difference between. Exception means what? Difference between information requested by auditor or contained in entity records and information provided by third party. So, I sent a confirmation request, right? Inside that I mentioned some amount. Third party also replied. He said that amount is same, no difference. Then there is no exception. Suppose, I mentioned amount 10 lakhs. Third party said, no sir, it is not 10 lakhs, sir, it is 11 lakhs. Now there is an exception. Information requested by the auditor and information provided by the third party, if there is a difference between them, then that's an exception. Generally, what information I request third party? Whatever information is there as per our company records. In our company books of accounts, what amount is there? That amount only I will request them to confirm. So that's why information requested by the auditor are contained in entity records and difference between this and this. That's why you see difference between yellow and green letter which I highlighted here. So whenever there is a difference, you must analyze, and what is its impact on the entire population you should check. Sometimes, see, remember, in our books of accounts his balance is 10 lakhs. He replied saying 8 lakhs only. Can I straight away say our client books of accounts are wrong? No. See, when you sent a confirmation request, third party replied disagreement, that he did not agree with this. Disagreement is an exception. That's not misstatement. Many students will think if third party replied with a different amount, then our books of accounts are misstated. No, wrong. You need to investigate further why there is a difference between our records and third party records. Sometimes third party records might be wrong. So that's exception. Now, if you think exception rate is low, if the exception possibility is very low, there also you can send NCR. Exception rate low means what? Last week only both of them conformed with each other. This week no transaction happened. So obviously the exception possibility is very low. And no conditions exist that indicate that recipients will disregard the request. I know very well, if I send a NCR, he will definitely see that. And if at all he ignore this means, if at all I did not get reply within 3 days means, I for sure know that he considered this. So that's it. If these 4 conditions are satisfied, NCR can be used. Now, suppose you sent a negative confirmation request, you did not receive any response. You did not receive any response, right? Non-receipt of a response means generally what you assume that everything is matching. But do you know explicitly that third party agreed this? No. Non-response to NCR does not explicitly confirm receipt by third party. In the recent CA final May 25 exam, these were asked in MCQ SMA. In the recent May 25 CA final, these points were asked in MCQ. So depth. Okay. And this point was there even in CA Inter. Many, in MTPs and all, they tested once. Non-response to NCR provide significantly less persuasive evidence. So to an NCR, if you don't receive any response, what does it mean? Agreed or third party has not seen? What does it mean? We don't know. So there is no explicit confirmation here. He didn't respond. So explicitly we don't know whether he agreed or disagreed. We don't know. Recipients generally will respond if the information is not in their favor and less likely to respond otherwise. They will respond when they want to disagree, which is favoring with them. Suppose if information what we sent is not in their favor, then they will immediately respond. Suppose if the information as per our records is favoring them, they may not respond. So NCR, you did not receive any response. There are so many interpretations on it. That's it. So non-response to negative confirmation request, how should auditor interpret? This itself can be asked as a 4 marks question. This itself can be asked as a 4 marks question. And under what circumstances NCR can be used? This itself can be asked as a 4 marks question. Finally, evaluating evidence obtained through external confirmation. You know what? The second point is there, right? Again, there is an MCQ in CA final. In the recent May 25, in CA final, they have asked this. CA Inter standard they tested in final. So there is a high possibility that in CA Inter also they will test. They tested it already. So now, whenever you are performing external confirmation, you might have got some result. The third party would have replied or not replied, or something would have been there. Please evaluate the results. Okay, whether the external confirmation have given you reliable evidence and relevant evidence, check out. See whether any further procedures are necessary. When you are evaluating individual confirmation request, like each confirmation request when you are evaluating, you can categorize the external confirmation result into 4 categories. The results is categorized into 4 parts. Response by third party, indicating agreement. Third party responded, everything is matching. Or a response, third party responded where you felt that is not a right response, you felt unreliable. Or non-response, third party did not respond. Exception, third party responded, but difference is there in the information. Like he gave some other information which is not matching with your records. So the result of external confirmation can be 4 categories. 4 categories. 1, agreement by third party. D, disagreement by third party. 3, third party reply is not reliable. 4, he didn't reply at all. That's it. Next. So the auditor's evaluation combined with other process helps in determining whether, so after looking at these results, you may have to decide whether further audit process may be required or not. You need to check out. That's it. 505 is over. Now finally, one more point. Sometimes management refuse to send external confirmation to 1 or 2 parties. Okay, they may say, sir, some issue is going on. Now if you send external confirmation again, so the client might misunderstand. Let's not. Okay, so the auditor shall inquire. If management is refusing, inquire the reasons about management's reasons for refusal and see whether that is valid and reasonable. Look at the evidence. Reasons for refusal may include some legal dispute going on or some negotiation that going on. So the auditor must seek evidence to validate the reasons. How the refusal impact the risk, modify the nature, timing of procedures, and get alternative. You want to get evidence through external, where external is not possible, so try to perform alternative procedure. So perform alternative procedure. And if management refusal is unreasonable, communicate with the top management, those charged with the governance. Further, such a refusal sometimes may indicate fraud risk factor. And what is its impact of refusal on auditor's report? Check out. Sometimes you may have to give a qualified opinion or disclaimer of opinion if the refusal is unreasonable. That's it. 505 is over. Tell me honestly, how many of you found out many new points in this? Imagine in a 15 minutes revision, I showed you so many new points. Remember, this is not something I'm discussing out of the box. This is there in the ICA book. Cross check. Right now, open ICA book and cross check. So many students, they were misguided by showing all the standard simple and nothing. Don't believe. Be clear. This is the depth of the standard. Mark my word, tomorrow exam you will find many advanced questions where some students might feel that it's not there. But don't worry, you all followed this, you all listen to this, you will not feel surprised if a question comes from in-depth corners of the standard. That's it. I hope you understood thoroughly 505. Next 510 initial audit engagement opening balances. So now, by the way, once just let me open. So 501 inventory completed, litigations and claims segment. 505 important definitions we understood, confirmation procedure, factors for designing confirmation request, management refusal, NCR, can we use a negative confirmation as audit to 4 conditions, evaluation of evidence. All these points we understood now. Correct? Now we will discuss 510. In 510 standard heading is what? Initial audit engagement opening balances. Initial audit engagements hyphen opening balances. Initial audit engagements dash opening balances. So this is the heading of the standard. 550 related parties. That's it. No more related party disclosures. No. Related parties. That's it. What is related party standard? We'll discuss later. Okay. 510. First, we need to understand opening balance definition, and there is a definition for initial audit engagement. First, we need to understand the definition. Then we need to understand what is the audit procedure for opening balance. Then we need to understand how to conclude and report, and to what extent audit procedures has to be performed for opening balances. What is the nature and extent of audit procedure for opening balances? That all, these 4 points we need to cover. Okay, in 510. So that's it. Just 2 minutes. Be online. I will be continuing. Just be online. 2 minutes. Yeah, somebody saying the book which they're following, many points are missing. Yeah, that's a problem. Many students were misguided with improper books. They say 100% ICA syllabus is covered, but not. Many, I should not say this, many faculties, some concepts which they can't explain, they remove it from the book. So that is something very serious sin. Fine. I'll go with 510 now. 510. What is 510? Initial audit engagement and opening balance. What is initial audit engagement? First time I'm doing audit of this entity. That's an initial audit engagement. And initial audit engagement. First time I'm doing audit for a particular client. That's an initial audit engagement. Or previously there is no auditor at all. Simple. There are 2 cases. Previously, the financial statements of the client were not at all audited, and I'm the one who appointed right now for the first time. 2, previously some other auditor was there, now I replaced him. Both these engagements are called as initial audit engagement. And when you are performing an initial audit engagement, you must obtain evidence about opening balances. That's very severe. Now, initial audit engagement, an engagement where prior period financials are not at all audited, or they were audited by predecessor auditor. That is called as an initial audit engagement. Opening balance means what? Opening balance means what? Account balances which are existing at the beginning of the accounting period, which are based on the prior period closing balances, last year closing balances carry forward. That itself is opening balance. Not only that, opening balances reflect prior period transactions, events, and accounting policies. Opening balance also includes matters which are just disclosed. In the last year balance sheet P&L, notes to accounts, some disclosures were there, like contingencies, commitment disclosures. They will also be treated as opening balance. Remember, the definitions are important for MCQ purpose. Next. So what is the objective? Very simple. In an initial audit engagement, the objective is, you have to obtain sufficient appropriate evidence about whether opening balances contain misstatements which might affect the current period financials. Accounting policies, are they consistently applied? And if there are any changes to the accounting policies, whether the changes are correctly reflected. So first let us look at accounting policies point. Directly auditors' conclusions and reporting, I will see. Okay, reporting on accounting policies, very simple. See, we have to get an evidence that last year whatever accounting policies were there, whether the same is followed. Sometimes changes will happen. Okay, changes, but let it be. Whether the changes in accounting policies were properly accounted and disclosed. If at all they were not properly accounted or not properly disclosed, then we should give a modified opinion, qualified or adverse opinion. If the auditor conclude current period accounting policies are not consistently applied, or changes in accounting policies are not properly accounted for or not adequately disclosed, the auditor must express a qualified opinion or adverse opinion. You have an evidence here. Accounting policies are not consistent, or there are some changes which are not properly accounted. Therefore, we must give adverse opinion or qualified opinion, as the case may be. Sometimes, reporting on opening balance. Directly, first let me talk about reporting on opening balance. Then I will talk about audit process. Reporting on opening balance. If you are unable to obtain evidence regarding opening balance, you are not getting evidence on opening balance, the auditor will express a qualified opinion or disclaimer of opinion. Suppose opening balance are materially misstated, which is affecting current period financial statements, and they are not properly accounted for or not adequately disclosed, the auditor must express a qualified opinion or adverse opinion, as the case may be. See, if you are unable to obtain evidence, disclaimer of opinion. You have an evidence that they are materially misstated in the current period, adverse opinion, worst scenario. Either qualified or adverse. Qualified disclaimer, qualified adverse. You see, part 1 revision audit reporting, I told where qualified opinion will come, where adverse opinion will come, where disclaimer will come, I clearly told. Next. Now, what is the audit procedure for opening balance? Verify that prior period closing balances are correctly brought forwarded or disclosed as a prior period item. See whether last year closing balances were they correctly brought forwarded. How do I know? How do I check? Perform one or more of the following procedure. Review audited financial statements of the prior period. Last year audited balance sheet is there, right? Check that with the current year opening trial balance. Like, evaluate whether current period processes provide evidence. Current period, no, some payment made to debtor. Opening date in April and May month, some payments were made to debtor. They were belonging to last year balances. See how much amount is paid. Oh, this much amount paid in the current year means last year outstanding amount is correct, right? Conduct specific procedures for opening balance. Specific procedure for opening balance means what? Opening trial balance we will match with last year audited balance sheet. Assets and all debit side of the trial balance. Liabilities and all credits in the trial balance. Like that we will tick. We will match like this. That's it. Next, suppose if auditor obtains evidence for misstatements in opening balance which will materially affect the current period, then perform additional procedures. Do go in depth, verify further to know what is its impact. If auditor concluded MMS exists, the auditor shall communicate to the management and top management, ask them to rectify the financial statements, ask them to show it as a prior period item. If they rectified and showed it as prior period item correctly, they accounted, then no problem. I will give unqualified opinion. Now, what is the nature? So what procedure we need to perform? We understood now. So what is the procedure for opening balance? 4 marks. Conclusions and reporting, straight away they can ask it as a 4 marks question. Now we are discussing about nature and extent of procedures. To what extent I will perform opening balance? The nature and extent is dependent upon accounting policies followed, nature of account balance and transaction, risk of MMS involved, significance of opening balance to current period. Suppose last year only we started business, no much business happened in the last year. So in the current year, opening balances may not be significant. So we just briefly verify whether predecessor auditor's opinion was modified. One more important thing, last year auditor gave a modified opinion. So then opening balances might play a very major role in the current year. So that also you should see. So factors affecting nature and extent of audit procedure, 4 marks question straight away. What are the factors that affect nature and extent of audit procedures for opening balance? What accounting policies they are following? What is the nature of accounting balance? Significance of opening balance? Whether prior period auditor has given a modified opinion. Suppose last year financials were audited by previous auditor. The auditor can obtain sufficient appropriate evidence by reviewing audited financial statements of the last year, review supporting schedules and all. And reliance on ordinarily you happily trust last year closing balances unless current period procedures indicate some misstatements. Generally, you are eligible to trust last year closing balances because last year somebody has audited. So you don't have to doubt them. By default, you can trust that they are free from MMS. But in the current period, you found some mistakes might be there in the opening balance. Then only you will not trust it. For current assets and liabilities, evidence for current asset liability may be obtained during the current audit. Like how in the current audit evidence we get regarding current assets and liabilities. For trade receivables and payables, no, in the current year collections might be there or the amounts might have been paid. That itself is an evidence for existence. Inventory, current year procedures may not provide sufficient evidence regarding opening inventory value. Therefore, additional procedures are necessary. With respect to inventory, generally in the current period, current year purchases and sales, if you're checking, you may not get evidence regarding opening stock. So for opening stock, if you want to get evidence, you need to perform additional procedures. First, do inventory counting and reconcile till opening balance. Perform process on valuation of opening item, test gross profit and cutoff. So for inventory, you may not get evidence by performing current procedures. You may not get evidence regarding opening balance in the current period. You may have to perform additional. Do first physical counting, trace back to opening balance all the transactions, and do valuation and perform cutoff procedures. That's so you can get evidence on opening value of inventory. For non-current assets, the evidence can be obtained in current period. Examining accounting records and underlying information, using confirmation with third parties, and additional. I think this non-current point is not that important, but this inventory point is very important. MCQ, it might be important. So MCQ, it might be important. That's it. Fight and standard is over. Who is a predecessor auditor? Predecessor auditor is auditor from another firm who audited the last year financials and is now replaced with you. You are the current auditor. So since you replaced the previous auditor, for you it is a first time audit. That's why it's called initial audit engagement. But we apply the standard even if it is a recurring engagement. Not just in initial audit engagement, we apply the standard, we follow the standard even if it is a recurring audit engagement. That's it. Fight and standard is over. Next, 550. I don't know whether I'm giving you additional points, all that. I don't know, but I hope I'm giving you, I hope I'm giving you crystal clear clarity in the shortest time. You see, 50 minutes hardly. We covered almost 3 standards, that 2 big standards, 501, 505, 550. Many of you, whoever thinks they're nothing small, easy standards, now you might have understood how lengthy these standards are, how much content is there inside these standards. That's it. Just 2 minutes, we'll continue 550. I'll be happy if you reply me, whether you're understanding or not, whether you're able to revise quickly or not. Yeah. Now, so look at this. 510 is over. Now 550. There are totally 5 concepts that we need to understand in related parties. Now, first we need to understand definition of related party. Many do not pay attention to the definition. Definition of related party is very important. Okay. Then what kind of related party relationships? Here there is a word called RPRT. Related party relationships and transactions. Related party relationships and transaction. Nature of related party relationships and transaction. That we need to understand. Then we need to understand understanding of entities, related party relationships and transactions. Existence of related parties. Small entities, how related party relationships and all will be there. Next. Now, meaning of related parties. Actually, many students think that related parties means we need to check disclosure requirement. Wrong. Here, the standard mainly deals with auditor responsibilities relating related parties. Specifically, it applies in relation to risk of MMS due to fraud. Most important, fraud risk factors in relation to related parties. That is what the primary focus of this standard. Now, what do you mean by related party? The standard first, what it says, follow applicable financial reporting framework definition. Suppose if accounting standard defines related party, follow accounting standard definition. If Ind AS defines related party, follow the definition. Suppose if the framework is silent. Suppose if accounting standard there is no related party requirement, or if Ind AS does not talk about related party, actually in reality they are talking. So auditing standard related party definition is useless basically. But in exams, MCQs they might ask. MCQ, in one of the MCQ they asked this note point. In one of the MCQs, they asked this note point. Okay, so now related party means what? If at all financial reporting framework is silent. So, who are related parties? Very simple. A person or entity that has control or influence over reporting entity. Reporting entity means the entity where we are reporting, means our client. On our client, did somebody has control? Did somebody has influence? They are related party. Okay. Another entity over which reporting entity has control. Another company is there. On that company, our client has a control. Our client has an influence. They are related party. Another entity under common control. There is another company. Along with this company, there is another company. We both are under common control. Through common ownership, close family member, common. Like these are nothing but sister concerns. These are nothing but sister concerns. They are also related parties. Means the company which is controlling me or influencing me, or the company which I am controlling or I am influencing, or another country, another company where me and that company were controlled commonly by somebody. Means sister companies. These are all related parties. Now there is one exception here. Entities under common control of a state. State means what? Here it's not state government, central government, not that. State means government, that's it. Entities which are under common control of a government, they are not treated as related parties unless they involve in significant transactions and sharing of resources. So companies which are under common control of a government, they are not treated as related parties. Okay. However, if they engage in significant transactions with each other, then they will again be treated as related parties. So just because government is having common ownership in many companies, you can't say each company is related party to each other. No, that's it. Now, control means what? Govern. Govern the entity and operating policies. Significant influence means what? You can participate. If you are having power to govern, then that's control. If you have a right to participate, then it's influence. Now, how do you know that there is a control or influence? Other equity holdings we have. In that entity, we have equity ownership. Financial interest is there. Holdings of other financial interest. Being part of top management or being a close family member of top management. Significant business relationship with key management. So, in all these ways, we can have control. They may ask you as a 4 marks question. What are the factors? They may ask you, define control and significant influence, and what are the indicators of control and indicators of significant influence? They may ask you this entire segment as a 4 marks question. Next, some related parties will be there with a dominant influence. Related parties sometimes can exercise dominant influence over our company. This is relevant in assessing risk of MS due to fraud. Is there any related party who is dominant in the company? And I need to know what kind of transactions happen with them. Are there any fraud risk factors in that? Now, this SP points relevant, special purpose entity point irrelevant, not required. Now, nature of related party relationships and transaction. Many related party transactions, most of the related party transactions, they will happen just like a normal unrelated party transaction. Most of the related party transactions occurs in normal course of business and may not pose any higher risk. Okay, compared to unrelated parties. What kind of risk is there in unrelated party transaction? The same level of risk will be there in related party. Generally, most of the related party transactions are just neutral, normal, like unrelated party transaction. The nature of related party relationship can sometimes result in higher risk of MMS. Some related party transaction may give higher risk. For example, related parties may have extensive complex structure. Like some related parties, they are not direct related parties. A complex structure is there. Information systems may fail to identify or summarize transactions and outstanding balances. Some related party transactions may not follow market terms and conditions. In all these cases, high risk will be there. Most of the related party relationships and transactions may carry no special risk. They will be ordinary. But in some cases, related party, the nature of relations and the nature of transaction can sometimes result in higher risk. Example, complex relation. Ineffective information systems like our computers, our systems are not capturing related party data, or related party transactions are happening at non-market terms. In all these cases, the related party relationships and transactions carry higher risk. They may ask you in exam, right? Generally related party transactions may not carry higher risk compared to unrelated party, but there are some circumstances where related party relationships and transactions may carry higher risk. Explain. You need to write this entire point B. They're indirectly asking you nature of related party relationships, nature of related party transaction. This question they're asking. Next. So that's why you need to understand who are all the related parties of the entity, what transactions happen with them. So identify the auditor shall inquire Who are the entities related parties? Are there any changes compared to last year? What is the relationship between the entity and related party? Are they holding, are the associate, are the joint venture? What exactly? Whether entity entered into any transaction? If so, what is the type of transaction? Purchase, a sale, a loan? What is it? And what is the purpose of the transaction? So the auditor shall inquire who are the parties? Are there any changes compared to last year? Are there any transactions? What kind of relationships we had? Are there any transactions with them? If so, what kind of transaction? How much amount involved? What's the purpose? The auditor shall do risk assessment procedure, obtain an understanding of controls established to identify and disclosure of related party. So they may ask you, write about risk assessment procedure for related party, 4 marks question they might ask you. Or they might ask you this itself as a 5 marks question, write about understanding of entities, related party relationships and transactions. This is they can ask you as a 5 marks question. Next, SS controls for authorizing and approving significant transactions. See, in the company what kind of controls are implemented to approve related party transaction. Evaluate controls for authorizing and approving significant transactions. See, are there any outside the normal course of business, any transaction? What controls the company has implemented, how they are authorizing that? Check out. And verify existence of related party. How do I know whether there are related party transactions in the company? First I will ask company, how do I verify existence of related party? I will look at income tax returns. I will look at information filed with regulatories. I will look at shareholder records. I will look at agreements with top management. I will look at significant contracts and agreements. I will see invoices and correspondence. I will see life insurance policy and see who is the nominee and on what people they have taken. I will see just a minute. I will see internal auditors report. I will see the filings with regulators. I will see shareholder register. So any 5 points. What are the records and documents you will inspect to identify related party relationships and transactions? Any 5 points you can write. The auditor has to be alert for related party information while reviewing records and documents. So you have to be very alert throughout the audit. Next. So consideration specific to smaller entities. In smaller entities, the control environment, smaller entities often have a different control environment. Like governance roles may not include outside members. Same person is management, same person is top management. In some cases, governance is handled directly by the owner himself. Control activities in smaller entities are typically not formal. They are less formal. So there may not be documented. No documentation will be there. So who are related parties? What transactions happen with them? There won't be any records also. The owner may either mitigate by full active overseeing or potential increase through involvement of related party transaction. So what is the audit approach in smaller entities? For these smaller entities, auditor may obtain understanding of related parties by inquiring management, observing management oversight and review activities, inspecting relevant documents. So in smaller entities, auditor have to ask direct management who are the related parties, observe how they are having control on the financial reporting, inspect relevant documentation. In straight away, this itself can be asked as a 5 marks question. That's it. Okay. So that's it. With this, related party 550 standard is also over. So that's it. Major chapter is completed in audit evidence. See, we are not covering 4 standards. I told 500, 520, 530, 610 I'm not covering. And I told you I will cover 2 more topics also. One assertions topic I'm covering, 2 audit trail topic I'm covering. Yes or no? Like as I already told at the beginning. So now I will cover 501 over, 501 over. Okay, 505 over, 510 is over, 550 is also over. Now concept of assertion, concept of audit trail I will cover. Now let's go, let's proceed. So in this, we have something called assertion. Assertion means what? Yeah, assertion you see. Concept of assertion. Assertion means what? Very simple. Assertions are nothing but representations by management. They may be explicit assertion or they may be implicit assertion, which are mentioned in financial statements, which are verified by the auditor to identify potential misstatement. For example, here there is an example. For example, see, I found in balance sheet under current assets like cash in hand 8,000 rupees. Like in balance sheet of one company, cash in hand 8,000 is there. What is it asserting? What management is asserting there? What management is trying to tell through that balance sheet item? What management is saying indirectly? Management is indirectly saying the company, firm means company here, entity, firm, organization, concern, anything is same. The firm had 8,000 in hand in notes and coins. Indirectly, that's what they're saying. that the cash was free and available for expenditure. The books of account also show an identical amount at the end of the day. So when I see balance sheet 8,000 rupees cash in hand, this is what management is asserting. Suppose another example, plant and machinery 2 lakhs is the original cost, depreciation of accumulated how that much, current year depreciation this much, total accumulated 83, and net return on value 1,17,000. So they mention depreciation schedule like this. What is it asserting? Indirectly they are saying the firm have own plant and machinery, historical cost is 2 lakhs, plant and machinery is physically there, asset is being utilized for business purpose, total depreciation is 83,000 till the date, 13,000 is belonging to current year, and the amount of depreciation has been calculated based on some method of depreciation. So by mentioning this information, by giving this information, management is trying to tell indirectly so many things. See, impliedly they are saying they're owner of the plant and machinery. That's an implied assertion. Yes or no? And we are indirectly telling physically plant and machinery is existing. These are all various assertions. So broadly, assertions are divided into these categories. Assertions related to transactions and events. You know what? Auditor has to verify these assertions. We need to verify whether transactions events really occurred. We need to verify whether all transactions that should have been recorded, or recorded, whether they are all completely recorded. Whether transactions occurred. Occurrence means what? When I want to check overstatement, I will check occurrence, whether really transaction occurred. If it is really occurred, then recording is correct. Accuracy. Transactions events are recorded appropriately with correct amount, whether the amount at which they are recorded, are they correct? That's called accuracy assertion. Transactions and events are recorded in correct accounting period. Array sale is recorded in 31st March. See whether the sale really happened. Transactions and events are recorded in proper account. That is called classification. So with respect to transactions, I generally check 5 types of assertions. With respect to balance sheet items, I will check existence, I will check rights and obligation, I will check completeness of assets and liabilities accounting, I will see valuation, and I will see allocation. Whereas for presentation and disclosure items, I will check occurrence and rights, completeness, classification, accuracy, and valuation. And remember, these assertions I may combine sometimes, like you see here. Auditors may combine assertions across transactions and balances, provided all aspects are verified. Now further, nature of assertions. Generally, assertions are not specifically stated but are implied in nature. For example, here, plant and machinery 2 lakhs worth of amount we showed. Indirectly, what we are concluding, what plant and machinery is owned by the company. We are indirectly concluding that it is owned, company owned machinery. Balance sheet does not say own plant and machinery. They simply say plant and machinery. Ownership we are assuming. That's an implied assertion. Okay, explicit. Some explicit assertions are made when specific details are needed to give a complete picture. For example, secured loans 4 lakhs. Name of the lender, nature of the security, interest rate payable. If at all we are mentioning them specifically, then that's an explicit. Negative. Sometimes assertions are negative in nature. Like negative means what? For example, negative assertion means, for example, implied negative assertion, I'll tell you. Suppose, in the balance sheet there is no building. Like fixed asset schedule is given, asset schedule is given, depreciation schedule is given, but building point is not at all there. The word building itself is not there. Impliedly we are saying that there is no building. Okay, next, explicit negative assertion. Explicit negative assertion means what? I am showing buildings and I am mentioning that 0, not existing. Explicitly I am saying that there is no building. That's it. So auditor, the financial statements contains an overall representation in relation to. So the auditor has to verify, if each, yeah, fine. This one you see. The auditor's opinion is based on overall representation. To form the opinion, auditor will verify all the assertions, whether they are explicit assertions or implicit assertions, both positive and negative assertions. Individual judgments leads to conclusion whether financial statements as a whole are free from material misstatements. So you need to verify all the assertions. So when you're reading balance sheet, try to figure out what are all it is trying to tell. Verify all those elements. That's what assertion concept is saying. That's it. That's what assertion concept is saying. Actually, much more in depth can be discussed in this, but that's okay. From revision point of view, this is more than sufficient. Then audit trail concept. Audit trail concept. So what is an audit trail? In calculator, when you're totaling some calculations, plus minus some total you did, you can do check, right? Like what are all items you added, what are items you reduced, you can check, right? That's actually an audit trail. That's actually an example of audit trail. Okay, so in companies, there will be so many people involved. So accountant is there, finance manager is there, purchase manager is there, production manager is there, storekeeper is there. Many of them will participate in accounting indirectly. So whenever somebody update any record, their name will be recorded. When they recorded, at what time they recorded this transaction, how much amount they recorded, later how the transaction is modified, is the narration modified, ledger account modified, everything will be recorded in the computer. That is called audit trail. So audit trail is documented, means recording flow of transaction that helps trace how a source document leads to a journal entry and ultimately reflected in financial statements. So purchases 10 lakh crore, purchases some 1 lakh crore is there. Breakup 10,000 purchase transactions are there. One transaction you take, that transaction, no, originally the transaction initiated through purchase order, 7 days back purchase order is there, then goods received on the second day, then they were entered in the inventory records on some third day, then it is voucher is prepared on fourth day, then finally entered in the books of accounts on fifth day, and that is how it is reflected in the financial statements. Entire flow of transaction I can see, that is called audit trail. Audit trail is used as audit evidence to establish authenticity and integrity of a transaction. It is a step-by-step record where we can trace accounting, trade, financial data into its source. So originally what happened? See, today purchase is reflected in balance P&L account, this much value. But before it is reflected here, it is reflected in so many places where originally it started. So I am tracing back to its source. That's called audit trail. Audit trails document evidence of events to reduce frauds, but maintaining audit trail is very storage cost is very high, database cost is very high, so system expenditure, time is required to analyze the data, some automated tools and all will be there. Okay, benefits of audit trail stands, this itself, benefits of audit trail, a 4 marks question can be asked, meaning of audit trail, a 4 marks question can be asked, any of this can be asked as an exam. Benefits, audit trail strengthens, it makes internal control strong, improve data security by fixing responsibility of user activities, rebuilding events when problem occur. If some transactions modified later, some fraud happened, I will rebuild what all happened previously. Okay, who entered this transaction, when they entered this transaction, everything will be recorded. Tracking user activity to identify responsible person. Audit trail analysis helps identify reason for problem, ensure that system operates as intended. Systems with audit trail features build confidence in auditors by verifying whether management controls were operating effectively. Audit trail helps to verify whether a transaction was performed by right person, authorized person or not. They enhance data security and increase reliability of audit evidence obtained during the audit. That's it. This is audit trail benefit. Yes or no? That's it. So with this, this audit evidence topic is mainly over. 4 standards are predominantly covered here. 4 standards are predominantly covered. Audit trail concept is covered, and I also covered assertions topic. That's it. Okay. So internal audit, no, I will just SA 610, I will just give you a brief idea. SA 610, using the work of internal auditor. You can use in 2 ways the work of internal auditor. Type 1, using the work which is performed by them. Type 2, using them directly. That's called direct assistance. Type 1, when you can use type 1, using the evaluation of internal audit function. Type 1, when I can use 3 points I will check. Organization status, objectivity I will check. IAF organization status, whether do they support objectivity, whether internal audit function is having objectivity or not, that I will check. First point. Second point, I will check their competence. Third point, do they have a systematic and disciplined approach, I will check. In all these 3 cases, if the answer is yes, then I will use their work. Now, competence, when you are checking, directly in exam, competence itself can be asked as a 4 marks question, or objectivity and its evaluation, this itself can be asked as a 4 marks question. Be careful, anyway this can be asked. So see, I'm just telling you how a question can come. Here IAF work shall not be used. Type 1 work don't use in the following 3 cases. Objectivity is not adequate, lack of lacks competence, does not apply systematic disciplined approach including quality control. In all these 3 cases, don't use internal audit work. Okay, next, nature and extent of work. So type 1 work, if I decided to use, to what extent I can use, what nature of work I will use. Generally we use internal audit work for testing operating effectiveness, inventory counting, performing substantive processes involving limited judgment. If there is a high judgment, we don't use their work. Tracing transactions through information system, testing compliance with regulatory requirement. Okay, next, circumstance where internal audit function work has to be used less, where we shall perform more of the work directly. More judgment is required in planning and performing, more judgment is involved in evaluating evidence. If the assessed risk of MMS at assertion level is high, that time also you have to perform the work directly. Internal auditor is lacking objectivity, internal auditor is lacking competence, high risk is there, more judgment is involved. In all these 4 circumstances, you have to perform the work directly, depend less on the internal auditor. Okay, then external auditor, usage of IAF staff for direct assistance. Direct assistance means what? Under my, the internal audit department, some 2 or 3 members will come into my team members and we will work along with them. So prohibition, if if there are threats to objectivity and if they are lacking competence, I will not use them for direct assistance. So okay, suppose I decided to take them into my team, but I will not give the following 4 kinds of works. Areas involving significant judgment, I will not allocate to direct assistance people, or area related to high risk of MMS, I will not allocate to them. It is related to work which they already perform, that area I will not reallocate them. Or decisions I need to take under this standard, under 16 standard, I need to take some decisions. That decision making power I will not allocate to them. Before I use internal auditor for direct assistance, I will have to enter into agreement with 2 people. One, the persons whom you are taking direct assistance with, them you need to enter into agreement. Management. With management, that management will allow their internal auditors to work under my direction, and from internal auditor written agreement like that, they will maintain confidentiality of whatever I am instructing, and any threats to their objectivity they should immediately tell me. Like that, I will enter into agreement with internal auditor. That's it. So this is 610 overview. I am not briefly, I just briefly discuss 610. Remaining 4 standards, I'm not covering this in depth. Okay, I'm briefly discussing, just an idea I'm giving you. That's it. With this, audit evidence topic is over. Okay, that's it. So I hope you thoroughly enjoyed with this revision. So audit evidence topic, 4 standards I covered, 610 I briefly told you, assertion topic I briefly told you, auditorial topic briefly told you, but 4 standards I covered little better. Okay, so I covered, I properly revised it, and I also told you at every standard how a different question can come in exam. That's it. Okay, take care guys, all the very best.